The 25 Laws of Trading Psychology. If you are looking to truly master the psychological side of trading, this is the definitive guide for you. I have codified 25 essential laws of trading psychology, a project that took extensive time and effort to refine. I urge you to pay close attention, as these principles are vital to your long-term success. Originally, I intended to keep this content exclusive to my private trading program. However, I truly believe that every trader needs to hear these truths. I am confident this will become one of the top trading psychology resources available. While I am admittedly biased, I want you to be the ultimate judge of its value. As we go through these 25 laws, I will be referring closely to my notes to ensure that no detail is missed. Every word is intentional. Are you ready? Let's begin. Law 1. Maintain constant consciousness. The first law is to remain fully present. You must cultivate constant awareness because, without it, you have no control over your actions. Two primary obstacles will try to pull you away from this state of consciousness. First, your brain naturally wants to operate on autopilot to save energy. This is a survival mechanism. Imagine if you had to consciously think about every step while walking. It would be exhausting. While autopilot is useful in daily life, it is dangerous in trading because it allows you to drift into a state where you aren't making active, logical choices. Second, your emotions can cloud your judgment. When emotions run high, the fight or flight response takes over, suppressing rational thought. In trading, these chemicals act like a drug, making it impossible to think straight. The key is to recognize the moment you start to feel anger or frustration and stop immediately before those chemicals take control. To stay conscious, you can set recurring alarms to check in with your feelings, or simply ask yourself before every trade, is this truly a high-quality setup? Law 2. Acceptance of reality. Most people tend to complain rather than accept their situation. In trading, many struggle to accept that losing is an inevitable part of the game. They waste time searching for a holy grail with a 100% win rate, but that simply doesn't exist. Reality dictates that you will have losers. You must accept that a realistic win rate is often between 55% and 75%. If you don't accept the markets as they are, including the unavoidable presence of fear, you become a victim of your own denial. Once you accept reality, you gain the power to navigate it. Law 3. The power of repetition. There are no shortcuts to building elite skills. To become a great trader, you must perform the right actions repeatedly. Even the best in the world, like Steph Curry, practice the basics every day to maintain muscle memory. In trading, you are building mental muscle memory. Repetition builds confidence and psychological resilience. Don't just watch a video once. Watch it 20 times. Backtest constantly and review your trades daily. Put in the reps until your edge becomes second nature. Law 4. Trading with peace of mind. You must minimize stress to make sound decisions. To trade with a peaceful mind, eliminate distractions, risk only a small percentage of your account, and commit to doing the right thing regardless of the outcome. Backtesting also provides peace of mind because it deepens your understanding of the market. When you truly understand the math, a single loss won't rattle you. Law 5. Cultivate good habits. Since your brain seeks autopilot, the cheat code is to train it to do the right things automatically. Motivation is fleeting. It might last a few hours or days, but habits are permanent. While it takes significant energy to build momentum initially, the reward is a trading life where you follow your rules without even thinking about it. Law 6. Continuous self-discipline. Self-discipline is a muscle that must be built daily. You cannot rush the process. Just as you wouldn't attempt to bench press 300 pounds on your first day at the gym, you shouldn't risk large amounts of capital before you are ready. Slow and steady wins the race. Use tools like accountability partners and clear goals to stay on track. Law 7. Eliminate fear. Through conscious practice, fear is a hardwired emotion that cannot be completely deleted, but it can be managed through right practice. Most traders practice the wrong things, which only increases their fear. By learning from every mistake and staying consistent, you build the confidence needed to feel the fear and do it anyway. Law 8. Full commitment. You must give trading your all. If you aren't fully committed, every speed bump will make you want to quit. Remember your why, the reason you started, and use the pain of your current situation to fuel your persistence. You win this game simply by refusing to stop. Law 9. Detach from money to reduce. Fear, most trading psychological issues, FOMO, revenge trading, overtrading, are rooted in an unhealthy attachment to money. When you stop thinking about the dollars and start focusing on whether the trade is good or bad based on your rules, the fear vanishes. Detaching from the money is like magic for your results. Law 10. Never stop improving. Constant improvement is the glue that holds success together. Many traders learn the basics but then stop growing. If you focus on growth rather than just the paycheck, the money will eventually follow automatically. It is impossible to lose forever if you never stop refining your craft. Law 11. Be realistic. Unrealistic expectations disconnect you from reality. Understand that you won't become a master in a month. Give yourself a year to learn. Every person's success timeline is different. Don't compare your Chapter 1 to someone else's Chapter 20. Just put in the work and let the results come in their own time. Law 12. Always take the right trade. Trading is about execution, regardless of how you feel. If your strategy says go, you must take the trade. Skipping a valid setup that turns out to be a winner often leads to emotional spiraling and revenge trading later. Stick to the plan to protect your mental capital. Law 13. Know your statistics. When you know your numbers, it's hard to do the wrong thing. Knowing that your strategy has a proven edge over 100 trades gives you the confidence to endure a losing streak without getting emotional. Trust the math, not your current mood. Law 14. Don't trade a strategy that doesn't work. Sometimes the problem isn't psychology, it's a flawed system. You must backtest your strategy to ensure it actually has an edge. A small adjustment to your system can often be the difference between consistent losses and total success. Law 15. Fix your inner self. You cannot be a sloppy person in life and a disciplined person in trading. Trading reflects who you are. If your personal life is stressed or chaotic, it will spill over into your charts. To get better results, you must become a better version of yourself. Law 16. Track your behavior. Your lifestyle affects your performance. Lack of sleep, personal arguments, or even excessive excitement can lead to losses. By tracking your behavior alongside your trades, you can identify patterns, like realizing you always lose after staying up late, and adjust accordingly. Law 17. Protect your confidence. Confidence is the most underrated asset in trading. Actions like revenge trading, breaking rules, or failing to backtest act as confidence killers. You must earn your confidence through disciplined experience and protect it at all costs. Law 18. Stay organized. Trading requires clarity, not guesswork. Don't rely on your memory. Have your rules and exit strategies written down in front of you. An organized trader will always outperform a chaotic one because they operate from a place of calm. Law 19. One trade means nothing. Stop judging yourself based on a single result. Trading is a game of large numbers. One losing trade is just one data point out of hundreds. Don't let a single minor setback destroy your day or your mindset. Law 20. Dig deep into your problem. When you make a mistake, don't just give a surface-level excuse. Instead of saying, "I revenge traded," ask why. Was it because you missed a previous setup? Once you find the root cause, you can create a specific solution, like closing your laptop for the day after a missed trade. Law 21. Avoid daily profit targets. Initially, setting daily money goals can lead to forced trades and overtrading. If you are close to your goal, you might take a high-risk trade just to round up the number. Focus on trading correctly, and the profit will be whatever it is. Professionals focus on monthly or yearly results, not daily ticks. Law 22. Take full responsibility. The moment you blame the manipulated market or a bad strategy, you give away your power. By taking 100% responsibility for every outcome, you retain the power to change those outcomes. You are the captain of your own ship. Law 23. Do not chase losses. After a big loss, the instinct is to make it back quickly. This is a trap. When you trade out of desperation, you aren't thinking straight. Step back, lower your position size, or go back to a demo account to rebuild your confidence slowly. Don't rush back into an injury. Law 24. Adapt to the market state. The market is always changing, ranging, trending, or reversing. You must trade what you see today, not what worked yesterday. Having multiple strategies for different market conditions allows you to adapt rather than getting crushed when the weather changes. Law 25. Focus only on what you can. Control. You cannot control the market's direction, but you can control your risk, your entries, and your reactions. Trying to control the uncontrollable is the definition of suffering. Take the trade, follow the plan, and let the market do what it's going to do. These 25 laws are the foundation of a successful trading career and a disciplined life. Master your mind, and the profits will naturally follow.